Right, good morning. Today is the 4th of July, Friday, midnight UTC. We are live streaming on Discord, and this session will be recorded and shared with the Verse community in the Verse Lounge and on our Rumble channel. So, welcome. Today we're having a Verse community call. This is a follow up to our community call last week where we talked about a new concept called Verse Alpha. And I want to follow up by introducing some of the signals that Verse Alpha may provide to you. And in particular, this session focuses around technical indicators. So if you're new to what alpha is, what signals are, and you're not sure about what technical indicators are, this is a session for you. It's a very gentle introduction to signals in general, technical indicators in general. All right. For those who are new to trading, you have not traded before, you've not traded stocks, ETFs, or any other kind, you don't actively read charts, this session is for you. This gives you a gentle introduction into technical analysis. And if you want to level up your trading skills, you're in the right place. All right. For those who are already experienced in trading, you may find this information too rudimentary, but do stay tuned. It's a good recap of technical indicators in general. And do stay to the end of the session because we will be dropping some sneak previews or sneak hints about what's coming up next. All right. So by the end of the session, we will be able to understand what technical indicators are. Why do we use them? We will be talking through a subset of technical indicators called candlesticks and learning how to identify them and their potential meanings. All right, of course, before we start, all the disclaimers here apply. Information is for educational purposes only, not financial advice. Do your own research and most importantly, know your risk tolerance before trading in anything, like in TradFi, stocks, ETF, what have you. And also, I think more significantly in crypto, right? So know your risk tolerance before going in, do your own research. Okay, so let's get into it. So what are technical signals? Okay, so these are clues from price information or the charts that suggest future price movement. All right, so perhaps you're already familiar about looking at a chart or two. You know the PDC chart, you know some of your popular tokens, the charts of your popular tokens. So sometimes you may want to guess whether it goes up or down, and these technical signals provide an indication of a possible outcome. All right, so using some techniques, we can identify what the data suggests. Okay, and this is used by traders to plan entries into positions, like when to take a trade, when to exit a trade, or to sell your position, and it helps to manage risk. Okay, so knowing when to enter and exit is very important. You don't want to be entering at the top of a cycle, right? And conversely, you don't want to be selling at the bottom of a cycle. Okay, so these are some tools in our toolbox that we can use to identify which stage of a cycle it is, what is the price likely to do, and perhaps collect this information and take a well-informed decision on what to do next. Okay, and these technical signals they are heavily used in TradFi and of course adapted now to crypto trading. So yeah, used everywhere: stocks, ETF, forex, and of course your trading of popular crypto tokens. All right, I think most importantly, I want to reiterate that a signal or a collection of signals do not guarantee outcomes. They only suggest possibilities. Okay, so you may have seen traders sitting on a desk with 6 monitors, 8 monitors, trying to analyze the market using the signals that they receive from their signal provider. Or you may be a hobbyist trader or a prop trader having your own portfolio of things to manage and your own docket of signals to look at. Right, so signals come in many forms and many levels of complexities, and we'll be talking through the simplest of all on this session, right? So you may have heard about the Golden Cross, the MACD, Fibonacci retracement, Elliott waves. Those are relatively complex, so those grow in terms of complexity, but we'll be focusing on the basics today. Okay, so the simplest form of technical indicators are candlesticks, and this was originally developed in Japan by a gentleman called Mr. Homer, and he was originally a rice trader in Japan, in Osaka, and he used this technique to analyze the price of rice. So very interesting origin story. And why was this so effective? Why did this catch on so easily? It's because it was a very visual and intuitive way to look at how the price was moving. And it condensed a lot of information in these candles. It condensed what people were wanting to sell or buy the price of rice for, and some indications of fear of selling too early, or greed, meaning wanting a higher price, or perhaps indecision, like I don't really care what the price is doing, or I can't decide whether it's going to go up or down. Right, so a lot of market psychology is captured in a candlestick or a set of candlesticks. Right, and it was really popularized in the 1980s to 90s with Steve Nelson's book, the Japanese candlestick charting techniques. So if you are familiar with trading in general, you perhaps may have already read through this book once, multiple times over. But if you haven't, I highly encourage it. So it talks about the origin of candlesticks and how to interpret them. All right, and now perhaps it's a standard in prop trading of stocks, forex, crypto, and what have you. Right, so very popular, very fundamental technique to master if you want to get into trading, or perhaps trading effectively. You don't have to be a professional prop trader. It's just, if you're a hobbyist trader, it helps you to make informed decisions. Right, so diving down one level deeper, so candlestick charts show price movement over a time period. So you can select a particular time period to see the candlesticks: yearly, daily, hourly, perhaps. So depending on the time period and depending on the price, the candlesticks provide some information, right, of that time period. And you can think of it as a visual summary of the trading activity and what the price is doing. Right, so candlesticks are very easy to read. It's obvious when you understand the shapes of the candlesticks. It's quite easy to see, and yeah, it's easy to pick up for beginners. All right, so I would encourage everybody to sign in at accounts.bitcoin.com. You can go to our market section in accounts.bitcoin.com. You have access to all the charts of popular crypto tokens, and you can there is a candlestick feature there that you can toggle to show candlesticks and practice at accounts.bitcoin.com. All right, so how are candlesticks formed? So this is the anatomy of a candlestick, right? So candlesticks are formed with four price data points. So there will be your open price for the period defined. So a period could be an hour, it could be a day, and so on. But it's an open price as the first data point. Second would be the highest price in the period. Third would be lowest price in the period, and finally what the price ended at the period. So it's called a close. So open, high, low, close. Right? So 4 data points, and you need to define the period, and that will help you form a candlestick. All right, and the values themselves, the open value, high, low, and close values, what these values are would determine the pattern of of the candlestick. All right. So this is how a candlestick is formed and how it's presented in the chart. Right. So again, different values of open, high, low, close would show different types of patterns, and we'll dive into some of the patterns today. All right, so the first and perhaps the easiest pattern to pick out is what I call the rising hammer. Some folks may call it different types of hammers, but I call it the rising hammer, or we can take it as just hammers in general. All right, I like to use rising hammer because it indicates what the interpretation is. So hammer, of course, you can imagine it's Thor's hammer. If it's holding up in his hand, it looks like that on the right. So you have the open, high, low, close forming this shape of the candlestick. And it's very easy to see on a chart. So if you just pull up sign into accounts.bitcoin.com and pull out your chart, BTC chart, you would see multiple instances of this hammer appearing on different time periods. And you can actually practice identifying the shape of these this candlestick when you have a chart open side by side, right? So how you identify it, it's the high and the close, it's almost equal, little to no shadow. So the shadow is the handle, if you will, handle of the candlestick, right? And it's a very small hit between open and close. All right, so small hit, long body, little to no shadow on top. So that's your rising hammer signal. All right, and how do you use this? So when you have a price that is falling and you suddenly see a rising hammer, right? So this indicates that buyers are pushing back out the price after a long, strong selling. Okay, so it's positive price. It hints to a reversal, meaning that price will be maybe going up in the future, right? After this rising hammer. Okay, so price going down, you see a rising hammer. It could be that the price will be going up after. Okay. All right, so that's a rising hammer put very simply. All right, next case is the falling hammer. So Thor's hammer in reverse. So you have a long handle on top, a big head at the bottom. So that's how I see a falling hammer. All right, so again, so same shape, but it's the reverse. It's upside down, and when it occurs during an uptrend, it hints to sell pressure emerging. All right, so if you're going to uptrend and you see suddenly a falling hammer, perhaps in the next few periods, you may see the price fall. Right, so it hints towards selling pressure, bearish reversal. Right, so that's candlestick pattern number 2. Again, it's the falling hammer or rising hammer is determined only by 4 data points. 5 if you include the period. So the period of consideration, open, the price at the start of the period, price high and low within the period, and close at the end of the period. So in fact, if you don't have candlesticks on your chart, you can actually calculate this based on the price of a period manually. So it may be a good theoretical exercise to go through it. Like if you know the period of consideration and you know the prices in between, you can math out if it's a hammer or not. All right, so tedious, but well, it's a intellectual exercise. Right. If you don't want to, just sign into accounts.bitcoin.com, click on the markets page, and you will see the hammer candlestick charts there. All right, so third candlestick pattern is called bullish engulfing. All right, so bullish meaning it hints towards a reversal upwards. Engulfing meaning that it's in this pattern it's a 2 candle pattern. So more data is being included. So we are looking at 2 candles now. The first candle being a red candle, small red candle, and the second being a large green candle. All right, and the large green candle must engulf, like fully cover the small red candle. Okay, so again, the hammers were a single candle pattern. So bullish engulfing is a two candle pattern now. So you're looking at two candles and looking at the relationship between these two. All right, so this indicates a strong buying momentum if you're just after, if you're on a downtrend and you see the bullish engulfing pattern, this indicates strong buying momentum that may be incoming, and perhaps a bullish reversal will take place after the set of bullish engulfing candles. All right, so slightly easy. I think it's pretty easy too. It's just a small red candle followed by a large green candle. All right, so quite an easy pattern to recognize. All right, the fourth is the reverse. So we have bullish engulfing candle, bullish engulfing pattern previously. This is the reverse case where we are on an uptrend, and suddenly we see a small green candle followed by a huge red candle, and it engulfs or covers the small green candle. All right. Okay. So again, there's a two candle pattern, and it indicates a reversal, meaning that if you were previously on a rise, price increase, and you see the bearish engulfing, this could mean that the reversal is going to happen, and in the following periods, the price may drop. All right. So again, small green candle followed by a huge green candle engulfing the small green. So that's the bearish engulfing pattern. All right, and expanding the data that we look at some more. So hammers were single pattern, engulfing candles are two candle patterns. Now morning stars are three candle patterns, and we can expand the model as we go along. Okay, I think we'll stop here at the morning star three candle pattern. All right, so basically you're looking at three candles this time. A first red candle, a huge red candle. Second small candle, looks like a spinning top here, where you have your the handle of the top and the base of the top and the body of the top in the middle. Right, so that's the indecision candle. I can't decide which way I want to go. And finally, you have the strong green candle, just in the next period. All right, so this pattern, big red, indecision, spinning top, and huge green candle. So this configuration or this pattern is called the Morningstar candlestick pattern, right? And it indicates that there is sell pressure, and it's met with indecision, like the market can't decide whether, okay, should I continue buying or selling, and can't make a decision. And then finally, in the last candle, the buyers take over and the price goes up. All right, so this is a reversal signal. So if you're on a downtrend, if you see this pattern, perhaps in the next few periods you'll be on an uptrend. All right, so the time periods matter, because if you're looking at a 15-minute window, you may see different things, and if you're looking at a hourly or daily window, you may see different things, right? So it depends on, again, your which period that you are interested to trade in. It may be the next 15 minutes. You're looking to buy or sell some crypto, and you want to see what's the best price, what's the best entry point. So you could take a look at the candlesticks. So if you don't know anything else, you can look at candlesticks and say, okay, should I buy now or later? Maybe should I wait for a pattern to emerge, then take the trade? So if you're not in a hurry to sell or buy your crypto, you can perhaps look at some candlesticks patterns to see if you spot any insights from there. All right. So again, these patterns are not individually. These patterns may hint towards a behavior in a market behavior, but you will need a lot more candles to strengthen your hypothesis. Right? So these candlesticks are very factual. Okay, this is what it is. It's up to you to consolidate all the information, combine it with other information, and then make a decision. All right, so if you're looking for more candlesticks, more information on candlesticks. So I recommend you to read Steve Nison's book, Japanese Candlestick Charting Techniques. Very good read, simple, easy read. You can Google the phrase candlestick pattern cheat sheet. So that will give you a whole load of patterns to learn about. Of course, you may see some of these memes on on Lazada or whichever e-commerce trading platform, e-commerce platform you're on. So it's a mouse pad with candlestick patterns on it. So that's also available. And of course, if you want to try anything, I encourage you to sign into accounts.bitcoin.com and head over to the market section, and you can see you can access the chart for the crypto that you are interested in, like BTC. Switch over to the candlestick view, and you can practice your identifying candlestick patterns there. All right. So some closing remarks. We've gone through an overview of the basics of technical signals here, because of candlesticks. So this is the level 1 of technical analysis and technical signals. All right. So again, no one signal can guarantee outcomes. You need to combine multiple signals together to paint a sensible picture of the future price, right? And of course, what kind of signals do you combine with? For example, you may want to combine with moving averages, which could be an indication of it could be a better long-term indication. You could combine with other technical indicators that I mentioned before. Won't go into that on this closing section. You can also, so besides technical indicators, you can also look into market sentiment, particularly on the news and in social media. Of course, I encourage you to access news at news.bitcoin.com. We provide timely, objective, and sometimes opinionated, but for good reason, news coverage on crypto tokens, projects, and of course, world news. World crypto news. So my encouragement is to, if you're starting out if you want to become proficient as a crypto trader, start with the basics, understand what the fundamentals are, start to explore other types of signals, and form your own portfolio of signals that you want to monitor that work well for you. All right. On a final note, of course, always manage risk. Don't trade on live accounts. Practice on demo accounts before trading live. This is not financial advice, and do your own research, right? And here is the internal alpha for all of you who have stayed to the end. Thank you so much for staying. If all of this is too much info, and if you're some of us are just lazy, we don't want to spend our time and effort to look at charts, right? So if you're that kind of person like me, we are lazy, we don't want to trade ourselves, but we want to rely on someone else to trade, stay tuned for a new feature that's coming up called Verse Alpha. Working title, it may be titled something else, but basically this feature helps to aggregate and collect high quality trading signals for you and share it with you in a timely and effective way for you to consume that information. All right. So again, we can only go so far to collect the signals for you. For example, calculating the candlesticks, identifying the patterns for you. But at the end of the day, it's up to you still to take that information, form your own opinion about it, and take action on that information. All right. So that wraps up my sharing for today. Now, why are we doing all this again? We believe that Bitcoin and crypto will be used by everyone around the world one day. So we are here to make crypto fun, easy, and rewarding for everyone. All right. Thank you so much for staying with me on the Verse Community Call. We'll be back next Friday, midnight UTC, same time every week. So we are live on Discord, and join us on the Verse Telegram group. guild.xyz/verse. So that's where all the conversation happens. So join us there. All right. Thank you once again. Have a great day and goodbye.